Hey everyone, this is Dr. Duru from Ahan Analytics with the market breadth. Looks like we had a week that was pretty much like a nervous calm. Now that we have a 2 week countdown till the president decides on whether to attack, bomb, missile, bombard Iran, however you want to call it. And it's going to coincide with the first expiration of the tariff pause. If you remember back when in April, we had that tariff drama, trauma, and noise. Amazingly enough, it's already the 90 days are coming up in July. So we haven't had any big announcements of deals. So who knows what's up? Even the UK deal seemed not to be a final deal based on headlines I saw. So as usual, let's start with the timestamp. It is June 20th after market closed just about 2 hours ago. Some really quick headlines. There's not really a lot of individual stocks I want to go through just because this was kind of a nothing week, and you'll see when I go through the charts, but there are some important headlines. So for instance, you see here another dream week for crypto. I'm going to show the chart of Circle, which is this stable coin company that's been just taking the market by storm. You could see here it's now up more than 600% since it debuted. Another one I like, I'm going to have to write an article for my Inflation Watch blog on this one, which is Federal Reserve Governor Waller. Basically, exactly contradicted what we just heard from Powell on Wednesday. Waller said that, hey, rate cuts should be considered by July, whereas Powell was basically saying, hey, rate cuts essentially aren't even on the table until we know what tariff policy is like. I think Waller also is claiming that tariffs are not going to be an inflation risk. So I can't wait to dive into that one a little bit, and I'll write about this on my Inflation Watch blog, and I'll put a link in here once I get that done. Then we have some other very interesting headlines. This is the one that I feared a lot. I'm a holder, a small holder of Accenture. It's a consulting, IT consulting company. And they said that you can see here, CEOs are postponing hiring consultants due to uncertainty. At first, when I saw that, I said, hey, that might be a good opportunity for a small fry like myself who are individual consultants. So we'll see what happens. You know, it's much easier for companies to swallow hiring one or two consultants that are essentially like temporary contract workers than an entire army of consultants. So wish me luck on that one, even though my position in Accenture got slammed. And actually, I was kind of bracing for that because of what happened to Booz Allen, Hamilton's stock as well. Similar kind of consulting business practice that got slammed by lack of government contracts. But now we see it's also happening in the private sector. See, I think there was one other one I wanted to point to here. Uh, yes. This one here, U.S. prepares action targeting allies' chip plants in China. So this is part of the ongoing trade war that the U.S. has launched against the world. These are the kinds of things that can hit us from left field, but I think we're also in a place where the market pretty much doesn't care about these things until something actually bad happens on the bottom line. All right, so let's jump to, I haven't shown this in a while. Swing Trade Bot, my favorite stock scanning software. I'm a big fan and I am a subscriber. I just want to sort of lay the context and groundwork for what I mean by it was a nothing kind of week. And we're kind of in this sort of just a I don't know, gray zone. You can see all the short-term trends are down for all the major indices, but long-term and mid-term are still up. And this ADX, which is sort of like a measure of momentum, is just weak or absent. So it's just blah stuff. So that means that we're not really in an environment where you want to speculate, but you also don't want to short because, again, peace could break out at any moment and the market will skyrocket higher. All right, so that's the general context. Let's go to my favorite technical indicator, the percentage of stocks trading above the 50-day moving averages, what I like to call AT50 for above the 50. You can see here that it is deeper into this danger zone. Again, based on my AT50 trading rules, this um, drop below the overbought threshold at 70% is bearish. And all week long, this market breadth indicator just sagged. You can see that. So normally I would be very bearish by this point, but As I keep emphasizing, the market is well supported, and we'll get into those charts in a quick minute. I just want to show the AT200, which is the cousin of AT50, the percentage of stocks trading above the 200-day moving averages. And you can see, fortunately, it is not. It held its ground pretty much most of the week and did not sink lower. So that's a um, good sign for sort of a longer term market health, market breadth basis. But it's still below this overall downtrend here. So it broke the primary downtrend. Hopefully you can see my cursor there, but it's still underneath this next secondary downtrend. So I want to see it break up to be more comfortable about my bullish short-term trading call. Okay, let's dive into the indices really quickly. And let me switch back to logarithmic. You can see what I mean by well supported. I keep making this point that yes, there's lots of bearish signals out there, particularly from my standpoint with market breadth and AT50, but we haven't even tested this support level, which is the close after, sorry, the first close after the November election. And it's essentially converging with the 20-day moving average support, which is this dotted line, and that was tested today. So even if the 20-day moving average breaks, there will be this support, and then there's a convergence between the 200-day moving average and the close on election day, which is now also converging with the 50-day moving average, which is the red line. Sorry, the 200-day moving average is that blue line. So you can see all of this convergence happening, which will be even, should be even stronger support. Now, on the flip side, what strong support means is that if the index actually breaks through that point, then I definitely have to get bearish, given all the other technicals going on. But as always, I take this stuff one step at a time. And oh, by the way, if this support does break, meaning the 20-day moving average and the first post-election close, I'm going to switch to neutral from my bullish stance. So that's a heads up for you all out there. I'm providing this information for educational purposes. As always, please trade and invest according to your own time horizons and risk preferences. Put your comments and feedback down below. Subscribe to the channel. Hit that bell icon to get notified whenever I drop new content. And of course, please share and like this content so the algorithm knows what's up. Okay, let's keep it moving with the indices. The NASDAQ, not much different than the S&P 500. It is testing, it's about to test its 20-day moving average support, and you can see the convergence also here between the 200-day and the 50-day moving average. This is going to be a very important thing to keep an eye on in coming weeks. It's probably going to take at least a few weeks. If you know these do get tested, it's going to take a few weeks, I think, given you could see this very slow pace of movement in the stock market. And the other reason why this is very important is because you can see that both the NASDAQ and the S&P 500 stopped short of testing the all-time highs, which were set earlier this year. So that means that there's a lot at stake for the support line holding up. And it's another reason why I really want to get bearish if those supports break, because it means it confirmed that it confirmed resistance at the all-time highs as tops. So that'll be a warning sign for us. Again, taking this one day at a time though, so that's not on the immediate radar. And then we have IWM, the ETF of small caps. I went ahead and bought, unlike last week where I totally missed this test here last Friday of the 20-day moving average support. I did buy into that test on Wednesday. So far, so good, but it's just barely hanging on. So it's got 2 weeks now to deliver for me. But of course, you know, as I just showed before, we're in this very tenuous position, even though the indices just kind of bounce right in place all week. Um, all right, let's take a look at the VIX. The VIX is also giving us a small warning sign. It's still above the 20 level, which is elevated. 20 indicates elevated risk. And you can see it pretty much just bounced in place all week. So it looks like it wants to be as I say, a coiled spring ready to pop. So that's our caution point right there. And you know, it's because it's holding on resilient, it means that the market is nervous about something. And of course, we know there's geopolitical tensions that should be providing a lot of worry. In fact, it's it's amazing that the market is actually doing as well as it is, given the tail risks that are out there right now. I mean, the tail risks actually are really bad. And when tail risks can be very bad and the market is not caring and not responding, that's your opportunity that's our opportunity, or maybe I should just say it's my opportunity to buy some protection. Oh, sorry about that. With put options. So that's what I have done. I forgot to mention I do have a put spread on the SPY, the S&P 500, but I'm not going crazy yet because again, the market's well supported and I need to see the technical breaks before I can really get too overly concerned. All right, let's go into some individual stocks. Like I said, Accenture, big disappointment today. It dropped 7%. You could see that here. I was hoping it would hold 50-day moving average support, but today's earnings kind essentially disappointed. And of course, technicals aren't a great way to gauge what's going to happen in earnings. So that was not my bet. My hope, it wasn't even a bet. It was just my hope that somehow Accenture would deliver good news because it didn't have an over reliance on government contracts. And that, as you know, proved to be disappointing, a disappointment. Now, I also mentioned Circle. Internet Group, this is exactly the kind of stock I absolutely cannot chase. It's been a skyrocket. Kudos and congratulations to any of you who bought at any point along this line. You're enjoying some crazy good gains. Even if you bought up until yesterday, today you're sitting on another 20.4% gain. That's pretty amazing. Congratulations. I am just going to have to sit back and watch because gravity will take a hold at some point and it's going to have to test some sort of important support level. Where that is, who knows? All right, another one which I want to congratulate all you speculators out there who hung on. I did lament about CoreWeave before, and um, it's an amazing sign of strength that the last 4 days, while the market was just churning in place, CoreWeave just started marching higher again. So that's really impressive. I know there's a massive short squeeze going on that's helping to push this. Again, I'm not interested in chasing this higher, but a test on 20-day moving average will finally get me just a little bit interested. So we'll see. Let's go into a few trades that I did make. I didn't make many trades at all this week because there just wasn't much opportunity. Gold is one of those places where I feel like there is this potential for a double top here. You can see how it spiked higher last Friday on the um, renewed conflict between Israel and Iran, but then it came right back down on Monday as the world actually did not come to an end and gold sold off. Sell off in gold just 1.4%, not that big a deal. And it just drifted lower all week as a sign of the market just sort of settling into this gray zone. So I decided to take a call spread. I believe I bought one for July expiration. Don't quote me on that. Um, let's see. I think I did a 323.30 call spread expiring in July. That's basically just a play on, hey, the momentum in gold could pick right back up. If you look really closely, you could see that there is this sort of uptrend still in place from the time that the gold GLD, Spider Gold Trust, did this picture perfect test of 50-day moving average support. Uh, Let's see, what else do I want to show? Oh, right. There's Carvana. Carvana is interesting because it also outperformed the market a little bit. I mean, it did gap down. I think, actually, I'm pretty sure this selling was related to Chanos going after Carvana. I decided today to get a fresh put spread again, just as a backstop if market risk does expand. Carvana could be one of those stocks that drops a lot. So I put a put spread there again, just as a hedge or backstop. And plus, Chanos is a pretty good short seller, but we'll see how that happens. Again, it's just a hedge play for me. Another one I want to go through is Apple, and we'll end it here. Apple, interestingly enough, popped today on a down day, 2.3%. I'm still bearish on Apple. It's still below the 50-day moving average, but you could see that it just popped up right there. So this bearish trade may be coming to an end soon, and this is my first warning sign. You can even see the trading volume spiked up on Apple. Oh, before I forgot the impact of Waller's claim that the Fed should consider interest rate cuts next month is rate sensitive sectors got a little bit of a boost today. You can see ITB, which is the iShares US Home Construction ETF, was up 2.2% in a down tape. So that's a small positive, but it still remains well below well within this downtrend. So it has a far, far way to go before it gets constructive again. But definitely, I'm keeping an eye on. I already have a position in ITB shares as a part of a busted housing market seasonal play. But the market is going to try to price in a rebound in housing well before it actually happens, and having a better interest rate environment is one of those catalysts that can could do the work. So keep an eye on this, or I'm keeping an eye on this. I will likely add to my position in ITB if it closes above its 50-day moving average again. You can see there were two false breakouts, but maybe the third time will be a charm if the market starts to speculate on imminent rate cuts. All right, thanks for checking this out. Again, this was a sort of blah week. There wasn't really much to talk about, nothing too exciting except for very specific, very speculative plays. And thanks for checking this out, and I will check you out the next time. Don't forget to subscribe.